Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX Global, bringing you the morning comment for the 15th of March. Yen strengthens as the Bank of Japan holds its fire. The Bank of Japan kept its monetary policy unchanged today and decided to monitor the impact of negative interest rates before taking its next step. Officials reaffirmed their commitment to ease further if necessary in order to achieve their inflation target and noted that inflation expectations have weakened recently, while the core CPI is likely to remain around 0% for the time being. On top of the strong yen and the contraction in GDP for the fourth quarter, we believe that the downgrade in the Bank of Japan's inflation outlook increases the likelihood for further easing in the coming months. The Nikkei closed down 0.7%, while the yen strengthened against its major peers following the decision, despite the bank's dovish stance. We believe that the yen is more linked to the global risk sentiment, and as a result, the direction of the currency will depend on any shifts in this environment. In Australia, the minutes of the latest RBA meeting struck a slightly more dovish tone than the decision statements, suggesting that the economy is growing at a below-trend pace. The concerns about the domestic outlook caused Aussie dollar to fall following the release. Nevertheless, given that since the meeting iron ore prices started recovering and the GDP for the fourth quarter beat expectations, we see additional easing by the RBA as less likely, at least in the coming months. The bank maintains its data dependency, and as a result, the direction in Aussie dollar is likely to be determined by incoming data going forward. Now the focus turns to the release of the unemployment rate on Thursday, which could provide evidence to whether January's rise in unemployment was temporary or if the recent global turmoil has left its marks on the nation's jobs market. As for today's events, the French CPI rate for February is expected to dip into the negative territory following negative prints for the same month from Eurozone and Germany. In Sweden, both the CPI and CPIF for February are expected to have slowed from the previous month. Inflation skyrocketed in January, driven primarily by energy-related base effects in the CPI calculation. As a result, February's data will indicate whether the upturn in inflation is healthy or January's positive surprise was just an outlier. A notable slowdown could increase the possibility for further easing by the Riksbank in the foreseeable future, and as a result, SEK could reverse some of its recent gains. In the US, retail sales for February are expected to have fallen after rising in the previous month. The forecast is supported by a slowdown in February's average hourly earnings, as well as declines in both the Conference Board and the University of Michigan consumer sentiment indices. This could bring the greenback under renewed selling interest. The PPI for February is also to be released and is expected to have entered the positive territory for the first time in over a year. Although this is usually not a major market mover, rising producer prices may lead to higher consumer prices in the following months. The Empire State Manufacturing Index for March is expected to rise but to stay below the zero mark, which still points to contraction in New York's manufacturing activity. The National Association of Home Builders Housing Market Index for March is also coming out. Riksbank Governor Stefan Ingves is the only speaker we have on today's agenda. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX Global, wishing you solid trading.